Welcome back. You're tuned into Bazaar Morning Call. Let's focus on Kalyan Jewellers as promised. Quarter 2, well, they registered a good revenue growth. Margins contracted a little bit, which was impacted by customs duty inventory loss, as well as that's what resulted in some profitability decline. Mr. Ramesh, the executive director at the company, joins us on the show. Hi, Ramesh. Good morning, and always a pleasure having you on the show. Give us three big numbers. What kind of revenue growth are you looking at for the year? What kind of margins? And same-store sales growth?
Yeah, so again, starting with Q2, you rightly said numbers were very good, and revenue in India grew by 39 and consol 37. And even now, if we see this running quarter, if you look at Diwali minus 30 days, the SSGs are strong. It is comparable to Q2, and we are upbeat about the Q3, the Diwali festive quarter, and nothing is going to majorly change for Q4. So revenue growth should be as strong as H1 is what we feel for the full year. And period after Diwali is also continuing to be very strong.
So revenue growth for the year in the vicinity of around 30% and margins maintained at around 6.5% to 7%. Doable?
Yeah, so not going into the number, but yes, yeah.
I mean, you said that it'll be as good as the first half, so I just extrapolated that, Ramesh. Got that. You know, tell us about this lab-grown diamond impact on natural diamonds. I'm looking at the studded share as a percentage of your mix. It's at around 30%. Where is this number headed? And if you could tell us, has there been impact? Is lab-grown eating into natural diamonds? Or are you saying the customers are very, very different? So actually, that's not happening.
So lab-grown diamonds, as we speak, none of the big brands are now catering into that because the price itself has not got stabilized anywhere. So for a customer, they believe the brand more than the product. So we brands do not promote lab-grown diamond as we speak. And customer demand is also negligible at the store level because we are a retailer. So when there is demand, we supply. So as we speak, the demand is almost zero. And that is why we don't cater. But and again, lab-grown diamonds majorly contribute to the solitaire portion, and solitaire also the high-value solitaire, where as a brand we have not focused also in the past. That is why we don't see any pressure on our studded ratio, and studded ratio is strong at around 30%.
And it'll hold at around 30%, or you have a target for it to move higher?
It should move marginally higher, but not majorly, because now we are there in almost all the non-South markets now, and the non-South markets where we are planning stores also are tier 2, tier 3, wherein the studded ratio might not be as strong as metro and a tier 1 market. So it should be stabilized in the range of between 30 to 32% and not more than that.
Got it. All right. Could you tell us what is the debt in the books and your repayment plans as well? I recall, you all had sold that plane and you'll say that you'll use the proceeds to deleverage the balance sheet. So what's the updated debt number and where is it headed?
So last year, you were right, the aircraft was sold and the proceeds were used for debt reduction. Last year, we reduced debt by around 300 odd crores. And this year, our target for the full year was around 300 crores of debt reduction, out of which 144 is done in H1. So we are on target to reduce 300 crore plus for this financial year in India. And on debt, the non-GML portion is what we are trying to reduce. That is in the range of 745 crore now, which we think that it will be completely repaid in the next couple of years.
Got it. All right. So, that 750 crores, but by the end of this fiscal comes down to around 600 crores, right?
Yeah, right. Correct.
Got it. Market share, I think, is around what? Around 5-6% odd. And you have said in the past that you're eating into the market share of others. So where is that number headed, say, by the end of FY25 and maybe by FY27, if you could give us a target?
Now we are in the range of 7%. When you look at organized jewelers, we have a market share of around 7%. And we are growing in the range of 30 to 35% on revenue. So ideally, in a couple of years, it should hit a double digit.
A pleasure talking to you as always, Ramesh. You're sounding very, very optimistic about business, good growth, debt reduction, and market share is something that you're gunning for. Thanks a lot for joining in and wishing you a good day ahead as well. Well, for the time being, please go ahead. Yes.
Congratulations for completing 25 years. and we are all great fans of your channel.
Thanks a lot, Ramesh, for being a friend and as well as being a supporter of us. And we always enjoy you coming on CNBC TV 18. Appreciate your support over the years and look forward to your support in the coming years as well.
Thank you. Thank you.